it first. Right. So right now we will study about ledger accounts, journal entries to record accrued and prepaid incomes. You have learned about how to do accrued and prepaid in terms of expenses. Now we move on to the incomes. Yeah. Okay. Let's start from the first one, accrued incomes. What is accrued incomes? The word accrued means the same with expenses, yeah? It means that it happens whenever the business has given the benefit or service to the customers during the accounting period, but the benefit or service have not been paid to the business by the customers, yeah, at the end of accounting period. So, once again, accrued means that benefit and service has been given, yeah, but it is not yet paid. Now, in terms of income, it means the business that is not yet receiving the payment. But in terms of expense, it's the business that is not yet paying that expense. Yeah. So accrued income is the opposite from accrued expense. Yeah. So far, any question? Clear, yeah?
No.
Okay.
Yeah.
Now, treatment for accrued incomes. Any amount due but not yet received or accrued incomes must be added to the amount received during the year. If expenses is amount paid during the year, in income, we have amount received during the year. Yeah, we receive the money. Yeah. So accrued income is the amount of money that is not yet received once again. Yeah. And it has to be added to the total amount that we received during the year. Yeah. After you add that amount, it must be transferred to the income statement. Okay. Be remember, accrued will always be added. Either it is expenses or income. Yeah. The treatment to the income statement, it must be added. Okay. Any amount due but not yet received or accrued income itself, it will then be stated as other receivables in the statement of financial position under current asset. Once again, accrued incomes will be stated as other receivables in the statement of financial position under current asset. Why? Because accrued income means that we will receive amount of money in the future. Accrued incomes also representing amount owing to the business. Yeah. Amount owing to the business is another definition of asset. That is why if you have any accrued incomes, it will state it as current asset. Yeah? And the name is other receivables. Okay. Do you have any question?
No,
Is
miss.
it clear enough?
Yeah.
Clear, yeah? Okay, next. Journal entry for accrued incomes. Since an accrued incomes is an asset, so we will record accrued incomes with other receivables in the debit side. Okay. And then on the opposite entries or in the credit side will be income's name. If you are in the commission received, then you will record commission received here. Yeah. If you are in rent receivable or rent received account, then the income's name will be rent received. Yeah. It depends on the name of the income itself. Okay. Next, to transfer incomes to income statement is debit side will be income's name and in the credit side will be IS. Yeah, it's different from expenses. In expenses transferred to income statement, IS will be in the debit side. Yeah, meanwhile, for income, it's the opposite. Yeah, IS will be in the credit side. Meanwhile, income's name will be in the debit side. So far, do you have any question?
No, miss.
Am I too fast?
No, miss.
No? Kenya? Ryan? All good, yeah? Okay. So accrued income is done. Yeah. I'm moving a little bit faster because you already know and understand about accrued expense. You just have to change the mindset or change the characteristic of expense to be income. Yeah. But some of the treatment will be the same. For example, all accrued incomes will be added, yeah, to the amount received, and then it will be transferred to SOFP, but for accrued income, it will be current asset. Okay. Meanwhile, accrued expense is current liabilities, yeah. Okay. Remember to identify the nature of it. Okay. Accrued expense means the business that has amount owed to third parties. But for accrued income, it is customer who owed money to the business. So it is representing amount owing to the business. Yeah. So you have to be able to analyze until that far. Yeah. Otherwise, if you wrongly identifying the questions, you will also wrongly treat that account. Yeah. Okay, continue to prepaid incomes. We have accrued, we also have prepaid. Yeah. Prepaid incomes happens whenever the business has received payment in advance. Yeah. Place yourself as the business. The business received already the payment in advance for the benefit or service that will be given to the customer in the future accounting period. Yeah. So if you are the business, you will get the money first, but you haven't give your responsibilities in terms of giving the customers benefit and service. Okay. The treatment for prepaid income, any amount received in advance or prepaid income must be deducted to the amount received during the year. Yeah. The total incomes that have been deducted with prepaid incomes must be transferred to income statement. Yeah. If we have accrued incomes, it will be added. If we have prepaid incomes, it must be deducted at the end. Yeah. Accrued and prepaid at the end. Yeah. And then any amount received in advance or prepaid incomes will then be stated as other payable in the statement of financial position under current liabilities. Now, why do we have to record this prepaid income as current liabilities or other payables? Because business received the payment in advance. So imagine that you are the business, you receive the money, yeah, you receive the money, but then you haven't gave the benefit or service to the customer. It means that you have a debt, but the debt is not in a form of money, but it is in a form of benefit or service. Clear, yeah? Once again, the business get the money, receive the money, but the business at the same time will have a liability or a debt, yeah, but it is not in a form of money. It is not in a form of money, yeah? It is in a form of benefit or service. But it is still a debt. Yeah, even though it is not in the form of money, but it is still a debt. Okay. Since it is a debt, it means we will record that as other payable under current liabilities. So far, clear enough? Clear, yeah?
Yes.
Okay, I need response, yeah? Any questions so far?
Got it.
Yeah, okay,
Yes.
good. Journal entry for prepaid incomes. To record prepaid incomes, income's name will be in the debit side. On the credit side will be other payables. Yeah, other payables will be for prepaid incomes, yeah. And then To transfer incomes to income statement, income name will be in the debit side also, just like here, yeah. And IS will be in the credit side. Okay, that's it. Do you have any question?
Not yet, Miss.
Not yet. Okay, let's continue to example of question. Oh, apologize. We have the account. Ledger account for accrued and prepaid incomes. You already understand how to do the accounts on the expense. Now look at the incomes account. Yeah, in the incomes account, everything is similar to expense except that they are swapping places. Yeah, if we look back on the expenses the account over here, here it is. Yeah, we have prepaid beginning in the debit side. We have bank and cash and balance CD of accrued at the end in the debit side. On the credit side, we have balance BD, we have IS, and we have balance CD of prepaid and yeah. On the income account, they are the same except everything in the credit side will goes to the debit. Everything in the debit side will goes to credit. Yeah, it's the opposite. Yeah. Okay. So if you remember expenses account, definitely you will be remember this expense account because they are similar, only the places that is changed. So in the incomes account, prepaid beginning will shown in the credit side, bank will be in the credit side. This is bank or cash. And accrued at the end is also in the credit side. Now, in the debit side, we have accrued beginning or balance BD, we have IS, and we have balance CD, prepaid at the end. Yeah? Any questions so far?
No, Miss.
No? Okay, good. How to find amount incomes transferred to income statement using calculation? As usual, yeah, the most common question in accrued and prepaid is to find how much the amount to be transferred to IS. Now, you are not always questioned or asked to prepare the account. Yeah, you might also, you might only question how to find income that will be transferred to IS. Yeah, so you don't have to do the account, but you must remember the places and you must remember the templates. And then if you want to find this IS, similar to what we have done in the expenses account, is that we will adding all the credit side, and then we will deduct balance CD and balance BD of accrued beginning and balance CD of prepaid at the end. Yeah, because this IS will become the balancing figure. Okay, now remember always in the accrued and prepaid information that will be given is always beginning balance. Yeah, either it is prepaid or accrued. Yeah, and then and two others. Yeah, what I meant by two others can be a combination between these three, between IS, bank cash, and balance CD. So definitely you will be given the other two informations, and then you have to find the other one. Yeah. So in the T account or in the T account of incomes and T account of expense, you will always have to find four information: balance BD, bank, IS, and then balance CD. Yeah, you will be given with three always, and you must be able to identify them. And then you have to calculate the other one. Yeah, the other one can be anything, can be IS, can be bank, can be balance CD. Yeah, so it is important for you to be able to know how to identify the question. Yeah, right. So if I transferred this T account into a simple calculation vertically to find this amount of IS, the amount of income that must be transferred to IS, the procedure or the workings will be bank and cash here, that represented by this one, amount received during the year. Yeah. So this will become your bank or cash. Yeah. And then it said added with prepaid beginning. We add with prepaid beginning. Then we add with accrued begin at the end. And then we add with accrued at the end. Yeah. We minus with balance BD. Minus with balance BD of accrued beginning. There you go. And minus with prepaid at the end. There you go. Yeah. At the end, you will find this IS. Now, once again, transferring amount to IS has its own keyword. Yeah. If bank and cash is represented by received in the incomes for IS, it is also the same like in the expense. It will be presented by the word for the year. Yeah. Or the other one is annually. Annually, yeah. Annually too means 1 year. Annual, yeah. So, any questions so far?
No, miss.
No? Okay, let's continue to the example of questions. Pay attention, yeah.
Yes.
Identifying the question. Simon Yemba sells farm machinery. His financial year ends on 31st of January. You are given with ending dates. Yeah. Now we have to find out how, when is the year. Okay. Mochiri traders pay Simon a commission of any goods purchased from them by Simon's customers. The commission is paid 6 monthly in arrears. You find this word, arrears. Arrears representing due or outstanding. When you see arrears, outstanding, or due, we are in the case of accrued. Yeah. On 1 February 2011, Simon Yemba was owed 280 in commission. Owed is also representing accrued. 1 February 2011 indicates that this is the starting of your accounting period. How do you know that? Because it is ended on 31 January. Yeah, after 31 January followed with 1 February, right? So your accounting period must be started from 1 February. Okay, so if they gave you 1 February 2011, means this 2011 is your starting year. So 1 February 2011 until 31 January 2012. Yeah, you have the accounting period already. So we have 280 in commission, representing the accrued beginning because it happens on the beginning of accounting period. Next, Simon Yemba received checks. Receive checks. Since we are in the incomes, so this is representing bank. You have two receivement, yeah, on 5th of February and 3rd of August. And then on 31 January 2012, which is ending accounting period, yeah, Simon Yemba was owed 296 commission. It is also representing the accrued end. Yeah. Now, we have informations on accrued beginning. 1. We have informations of bank. 2. We have informations of accrued at the end. 3. We always have informations 4 to be able to do the T account, meaning that you have a missing information, and that missing information is, what is it?
IS.
IS, yeah. So IS is our missing information, and then we have to be able to prepare commission receive account, yeah, and also calculating how much the amount transferred to income statement. Okay, now this is how I do the commission receive. We have the first informations of accrued at the beginning, which is 280. Accrued at the beginning is representing in the debit side. So I put 2011, February 1, balance PD of 280. Yeah. Next information, I have bank. This bank in the T account of income will be shown in the credit side. Remember, you are in the income, yeah, not in an expense. In the expense, bank will be in the debit side. But meanwhile, we are in the income. So since I have 2 payments that is received, so I put both of them in the credit side. If I'm given with 2 dates, then I have to put the 2 dates inside. Do not combine them. Yeah. So February 5th, I have bank. For August 3rd, also I have bank. 280 and 312. Yeah. Next, I also have accrued at the end, 296. Accrued at the end is represented by balance CD in the credit side. So I put balance CD in the credit side like so. And then I do have missing informations of IS over here on the dates of at the end of accounting period, which is 2012, January 31. How to find my IS? The IS will be total of the credit side, 888, minus with 280. Then I have 608. And then it is required to bring it down to the next accounting period, which is 1 February 2012. So I transfer this to the next accounting period. It becomes it becomes 2012, February 1, balance BD 296. Now, do you have any question?
No, miss.
Am I too fast?
No, miss.
No? Rachel, everything good?
Yes, miss.
Okay. Next, yeah? How to record a journal entry for accrued commission received. So since we are in the accrued commission receive or accrued income, it is other receivables, yeah? So in the journal entry, put the dates, which is January 31st, 2012. I put other receivables, and on the credit side is the name of the income, which is commission received. And then how much the amount that I have to put here, it's the amount that is representing the other receivables. Other receivables is represented in balance CD over here, yeah, with the amount of 296. So the amount is 296. Yeah. To record amount transferred to income statement, the amount is this one, 608. So journal entry will be commission received in the debit side and then IS in the credit side. Yeah. The date is also at the end of accounting period. Right. Next is extraction of income statement and statement of financial position to show connection with the commission received. In the extractions of income statement, commission received is other revenues or other income. So after you put the name of the company as well as the name of the statements, and then don't forget to add the heading for commission received. Oosh. What did I do? Oh, no. Okay. So other revenues or income will be commission received, and the amount is 608. The amount is exactly the same like the one that you transferred to IS, which is 608. Yeah, that will be the amount that transferred to IS. So that is why in the extraction of IS, it has to be shown by this number. Don't forget that you put this word. Yeah, this heading is important. If you don't put other revenues, it will be wrong. Yeah, it's important to put this heading. Next, for extractions of statement of financial position as at 31 January 2012, is that since we have other receivables is an asset, so you have a current asset as the heading section. Yeah, the heading section will be current assets, and then the name will be other receivables, and the amount is the amount that is representing that other receivables, which is 296. Yeah. Okay, done. That's for accrued income. Do you have any question? No?
No.
Okay, good. This is really a no, but understand, yeah? Not no, I don't know what you hear from me. I mean, like you really understand what I'm saying, yeah?
Yeah, miss.
Yeah. Arfian, do you have any question? Okay, good.
No, miss.
Now, continue to prepaid income. Now, pay attention on prepaid incomes. This prepaid incomes is not same like the usual way of I presenting the question, yeah? This is another variation of showing a prepaid and accrued incomes, yeah? Or accrued or prepaid case, okay? Now, Nancy Tan Nguyen owns a clothing store. Her financial year ends on 31 October. Again, we know that this is the ending month, but we have to find out what is the year, yeah? She leased part of her premises to Gemstones Limited at an annual rent. Remember? Annual. When you hear this annual, it is representing IS, yeah? Or annual means it is for 12 months. Yeah, this amount is for 12 months because annual is 1 year, okay? So previously you never given with informations of annual, yeah? You only given informations with balance beginning, bank, or CD. Now you are given with annual. So it's an extra information for you, okay? Next, on 1 November 2011, they gave you year. If ending is 31 October, the next day is 1 November. So this 1 November 2011 is showing your accounting period. 1 November 2011 it is, yeah? And then it must be 2012 for the ending year. Yeah? Okay, Clarine? Next, yeah? 1 November 2011, Gemstones prepaid 2 months rent. You did not given with the amount, how much is it? So you have to find out how much is 2 months rent. Yeah, then you are able to analyze, oh, this is for it. Yeah, the annual rent given 2592 is for 12 months. You have 2 months rent. How do I find 2 months rent out of 12 months payment? Yeah, so As usual, 2/12 times 2592, then you have 432 as the prepaid beginning. Is it clear? Clear, yeah? So you have informations on prepaid beginning, checked. You have one informations already. Number 2, on 1 January 2012, which is still in the accounting period here, yeah. Nancy Tanwin received a check for 1296 for rent to 30 June 2012. Receive a check, it means it is for bank. 1 July 2012, she received a further check for rent, 1080, yeah, for rent to or up to 30 November 2012. 30 November 2012 is outside our accounting period. Look, yeah. So that's it. You don't have any more informations, but you can analyze and identify that you have something there. Yeah. Okay, let's see from this one. Since it is payment for until 30 June 2012, which is 1 January 2012 until 30 June 2012, is still inside of our current period. So you cannot give informations about accrued or prepaid from here. Yeah, because after 30 June 2012, the next day, Nancy paid again 1 July 2012. It is until 30 November 2012. Is it over or before in the accounting periods? Is this a prepaid or an accrued? We can answer that with prepaid. Why? Because our accounting period ends on 31 October. And this payment is until 30 November, which is passing our accounting period. Yeah. Now, for how many months it is passed? After 31 October 2012 to 30 November 2012 is only for 1 month. Yeah. 1 month means it is from 1 until 30 November. So full month of November, yeah? From 1 November to 30 November, only 1 month, yeah? How to calculate this? 1 over. Now you have to be able to find out how many months is this 1080 payment. Yeah. So from 1 July 2012 until 30 November 2012 is 5 months over here. So to calculate 1 month prepaid is 1 over 5 times 1080 equals to 260. There you can find the prepaid at the end. Okay. Any questions so far?
No, miss.
Okay. Next, how to prepare rent receipt. You have informations on prepaid beginning. Check. 1. You have informations on bank. 2. You have informations on prepaid at the end. 3. So we need 4 informations to be able to do the account. So the missing information is the IS as usual. Yeah. To draw the rent receipt the account, it will look like this because you have informations on prepaid beginning. So we start on the credit side, November 1st, 2011, balance BD 432, just like what we calculate. And then we put the bank informations, 2 of them on 1 January and 1 July. Put that according to the dates, yeah. January 1st will be the first one and July 1st will be the second one. And then you put it here. And then you have informations of prepaid at the end of 216. Prepaid at the end is balance CD. Before you put balance CD, put down the IS word, the IS detail first, yeah? And how to find out the IS is 200 at 2008 2,808 minus with 260. Yeah. So that's how you got it. And the amount is 2,592. Yeah. Once you finish finding this IS, don't forget to carry it down to the next accounting period, balance PD 260. Okay. After that, journal entry to record prepaid rent. Since prepaid rent is other payable, so to record journal entry, rent received will be in the debit side and other payables will be in the credit side. Yeah. And next, journal entry to record income statement is that your income statement is 2,592. So rent received will be in the debit side and IS will be in the credit side. Okay. Last one, since we have rent received is also as other revenues or income. So you have to put this heading and then you put rent received. The amount will be the amount of your IS. And then since you also have other payable, so in the statement of financial position, it is under current liabilities. Put down the name of other payables and then put down the amount, which is 260. Okay, that's it. That's the end of this chapter. Do you have any question?